together, I lended out my funds. Well, I
Mm,
lended my funds out to recommended people. They always say go with know, like, and trust. They say go with
mm.
people who are experienced and, underwrite the deal. I did the underwriting. It was really good. And I lost it all. like it,
Oh no. What's going on, everybody? Welcome again to my channel. I am so excited today to have Melissa Palmer here with us. She is an amazing person in our community and has helped so many of us when we make knucklehead, not only when we make, but also preventing knucklehead moves. And what do I mean knucklehead moves is when we talk about private money lending. So, Melissa, thank you. Thank you. Really grateful to take your time and spend it with here and my audience to chat a little bit about private money lending. Thank you again.
yeah, thanks for having me.
I'm so excited about this conversation because, you know, we kind of didn't see each other we sort of saw each other at Squad Up Summit. It was an excited event. Tons of people in there wanted to level up their game when it came to real estate investing. And I'm sure you had tons of conversations with different types of investors. But I'm curious, what did Melissa Palmer, what got you into real estate? How did that journey start?
Yeah. So the journey for me started in 2009. I was active duty Air Force. I'm still in the Air Force, but I'm in the reserves now. So I just hit 18 years.
Thank you
And
for your service.
thanks for your support. Um, so yeah, I was living in Vegas at the time. It was 2009, bottom of the market, right? And so there was a lot of fear and real estate is risky. But I also was very frugal and it
Mm,
was cheaper to have a mortgage than it was to have rent. And for me, if I could have a 4 bedroom, 3 bathroom house for less than the 1 bedroom, 1 bath apartment, it was kind of a no brainer. So I got into real estate with my VA loan, the original zero down. And I, had a very HGTV mindset. I did not do a lot to the property, but it was a really good entry and way to get my feet wet in a really low, in a low entry point, zero down. There were some
mm,
closing costs, but not a whole lot. And then
right.
property prices were super low. So I think my purchase price was something like $120,000 for
Oh,
a 4 bedroom
wow.
bath in Vegas in 2009. And so it was a short sale.
Wow.
Um, a short sale buy was my first one, and that's kind of how I got started, right? And so over time it became the house hacking. I didn't know what bigger pockets was, but I was totally
Mm.
following the bigger pockets house hacking methodology. um and again, HGTV was like my only education. So I think it was called Income Property. I can't remember the Canadian's name, but he used to host it. And so I was like, oh, I'm going to make an income property was my next investment in Hawaii, which is an incredible market to get in with zero down because it's one of
Wow.
those markets that a lot of people can't touch,
Yeah.
right? Um,
Yeah.
and so used my VA loan there too. And yeah, and so I ended up selling that one in 2020. Very good time to sell. I bought an Airbnb in Big Bear, California. So I just kept doing slight iterations, right? It went from
Mm.
just buying to buying and house hacking to okay, now this is an income property. This is an Airbnb, specifically an investment. So just little iterations throughout. And yeah, so that's how I got into real estate.
Wow. So I'm curious, right? So you bought your first property using a VA. Was your idea from the beginning, I'm going to acquire a whole bunch of properties and buy and hold them and do all this stuff? Or I know you said you were doing different iterations. So as you were coming along your journey, you were like, oh, let me do this now. Let me try it on this one. Is that what kind of your pathway you took?
Yeah, I mean, it was just little steps at a time, right? And um so my house in Hawaii was a long-term rental. And everybody was like, "Oh, it's so amazing. You own a house in Hawaii." And I was like, "But is it? Because it's not mine. It's the renters, right?" And so it's not like it's my property. And so that was my shift to the short-term rental because I thought,
Mm.
"Oh, well, this is something that I'll actually get to enjoy as well." And so it was just like first it was just for me, then it was just for other people, and then it was like, "Oh, I can make it income and for me." And so
Mm.
just little iterations. And I now have I've got a triplex of long-term rentals. I've got a dirt lot that I'm developing. It's a commercial
Nice.
mixed use property. Yeah. And so definitely dabble in a lot, right? And each thing has taught me so many different lessons. But um yeah, so I didn't necessarily ever have this vision of having 20 doors or anything like that. That's not my profile, right, or
Mhm.
flavor of investing. I wanna have, some sort of, obviously income, obviously equity is the
Absolutely.
big one, especially in
Yeah.
California. It's not so much about the income as much as it's about, like, the long-term, investment in real
Investment.
estate because yeah, so, yeah, I don't know if that kinda
Yeah,
answered.
no, absolutely. Yeah, it does, right? Because I mean, here in Atlanta, like there was this reel that was released by Jamil Danji. I'm not sure if you saw it, where there's a little when I was a baby, I wish somebody told me to buy real estate, something like that along those lines.
Right. I was a
So
baby. I was, like, 18 years old or 19 years old when I bought my first house, but
look
I
at you.
yeah,
Wow,
but it was
that's
because I
amazing.
had the VA loan, right?
Yeah.
And so I was a
Well,
baby.
at least you had the maturity to make that happen, right? At 18. That's pretty powerful. That's pretty awesome. Congrats on
Yeah,
that.
the military has a way of making you grow up real quick. So,
Well,
like,
some
go to
just
work
because some still stay knuckleheads. It's like
for sure. Yeah, that's true.
well, that's exciting. So you were able to acquire those properties and now you're into development. But everybody in the community, right, comes to Mel for Capital Verified on the PML lending side. How did that journey begin, right? So you acquired a property at 18 years old using VA. You're like, I'm going to house hack this, right? And then you got a property in Hawaii, and now you're growing your portfolio. How did lending come into your business? Like, or was it even a business? Or were you like, hey, I got this opportunity. Let me put some money there and put it to work?
That. So, yeah, it was I joined the creative finance space, right? And I got in there because I realized after I got off of active duty, I had this fantastic W-2. I was extremely lendable, right? And so when I got off of active duty, I no longer had this like buying power that I used to have. And
Mm,
a friend and I were in the exact same boat. She was out of the military as well. She lost what was like a 250K a year job where she would just go deploy a couple months out of the year and make bank as a defense contractor. And um, she shifted because that wasn't giving her a lot of purpose or joy and
mm,
fulfillment. And so when she shifted, we were like, okay, we're going to buy a ranch, right? And this was our intent and our vision. And the both of us are so used to, I mean, we have amazing credit, we have a lot of savings. We're just like super responsible, fiscally responsible people. And like, we can't get a loan. What the heck? And so
right.
that's how I kind of got into the creative finance space because it was like, oh, you
Mm,
can do seller financing, you can do sub twos, you can do whatever, right? And so I
right.
got in the space to be a buy and hold investor.
Hmm.
But in the meantime, I had a ton of cash. And because I had saved a lot, I had invested really well with my real estate holdings, and I'd always had really good income. And so I had cash sitting there, and there was the craze of, if you have money in the bank, you should lend it to more experienced people that are doing big deals while you learn, right? And so I started doing all the paperwork for people. I was a federal agent in the Air Force, so I did special investigations, and I'm really good at paperwork and I see a lot of ding dongs that aren't. So I was like, oh, I can clearly do this, right? And so while I was doing the paperwork and kind of touching a whole bunch of other people's deals and seeing the structures and getting better at my underwriting and seeing really crappy deals being put together, um, I lended out my funds. Well,
Mm,
I lended my funds out to recommended people. They always say go with know, like, and trust. They say go with
mm.
people who are experienced and, underwrite the deal. I did the underwriting. It was really good. And I lost it all. Like,
Oh no.
a completely fraudulent three-part scheme. One part was an LP in a boutique hotel, beautiful hotel. It's still in renovation. But the structure, I'll keep going before I get in too much in the weeds on each thing, right? One part was a loan, and then the third part was a partnership for a buy, fix, and hold operation. And I am so thankful for that third part of this scheme because that was the way I was able to see that I was robbed. um,
Mm.
so that part of the scheme was the only part that I had direct observation on the money and the properties. And at some point, this 2 week renovation had been about 4 months in. And every time I asked for an update, it was going to be done in 2 weeks. And so I just ended up getting somebody out to the property myself. And it was in worse condition than it was purchased in because it was vacant the whole time and they were just taking
Yikes.
money out of the bank account pretending to do construction. And so um yeah, so that's how I got into the due diligence part because I realized I could repurpose my investigative skills. I felt like a cop again. All right. So, like,
Yeah.
all this stuff happened. And so I was going backwards and I was investigating what happened, when, where, why. Somehow these ding dongs were telling me information. I'm like,
Mm.
that's amazing. And so I was able to kind of dissect what happened. Meanwhile, I'm also helping other people with all their paperwork and their transactions, and I'm watching their horrible transactions fall apart. And I'm like, okay, there's a pattern here. And instead of helping people on the back end, right, which we've talked before, and it's like I can do the cop thing, right? But
Sure.
the cop thing is not fulfilling to me because going back and saying, okay, what happened? Where did it go wrong? How do we investigate this and find out what happened, right? That doesn't get you your money back often.
Yeah.
And even if we can take it to court and even if you can win, just because you win a judgment doesn't mean you get your money back. So knowing that there's patterns here, knowing
Mm.
that there are things that we can do to prevent it, I wanted to create this proactive service instead of reactive, investigative type services. And so I offer investigations essentially on the front end now, is what my due diligence service is, all because I just wanted to be a buy and hold investor and I wanted to make some money while my money was sitting in the bank. And so, yeah, it was you get into private lending because you want to be passive, but there's a very
Yes.
active component of it when you're doing your due diligence and structuring safe deals in the first place.
Yeah, that's so powerful, right? And I think that's why you created Capital Verify, right? Like your framework around it. Because to your point, right, you could lend money and think you're passively doing it, but at the same time, if you don't do all the stuff beforehand, you're going to be in a situation where it's not passive. You're actually
It's an active
you,
nightmare.
yeah, it's an active nightmare.
Yeah, it's the least passive when you're going after these people for your money. And you have a lot more money to lose, I think, in private lending than you do buying a crappy fix and flip. Um,
Mm,
because, okay, say you buy this fix and flip and the contractor robs you. You still have a fix and flip at the end of it. And if you don't do your paperwork right, if you don't have safe structured deals, you think you're going to get a property, but you also don't realize that one, it costs money to get a property back. It costs money to go into foreclosure.
yeah.
It costs money to go to court. Um, and two, if you're not even secured, say you just have a promissory note and not an actual security instrument, say you do have a security instrument, but the property is not even worth a portion of what you paid, at least if you are, doing some fix and flip and you lose money to a contractor, hopefully you didn't pay them all up front,
Right.
right? You're only losing a portion of that, whereas you're losing the whole bit if you're a
Yeah.
lender. So, yeah, unless you're structuring safe deals, and that's where the due diligence comes in. That's where my framework helps private lenders vet the deal, vet the person, and verify the information. Because at the end of the day, everybody likes to say, "Oh, with asset-backed loans, that the deal's all that matters," and that's just not true.
Sure.
Um,
Yep.
so, and they also usually stop at underwriting, and underwriting is like, yeah, that's fine, but underwriting, I
It's
like
one side of
to
the coin.
yeah, it's one side of the coin. I mean, underwriting's like calling an egg a cake, right? It's not due diligence, it's an ingredient in due
Ingredient. Yep.
diligence. So, we need to underwrite, we need to comp, we need to look at the timeline, the security, the returns, right? Do the returns match the risk? And then you need to move on to the person. Once you look at the
Mm,
person, you're looking at their background, their education, their experience, their assets, income. Why does income matter? Because if they're supposed to make a monthly payment to you, well, they're also paying for a fix and flip. Like, the math needs to math, and the person is
absolutely.
part of that math equation, not just the property, unless it's generating income while it's being worked. And then you still need to know, where's this balloon coming from? Are they selling it? Are they, it's just, there's so much more than underwriting. That's such a
Yeah.
buy and hold investor piece of advice to a lender. And like, to me, I don't want to take my advice from the buyer. I want to take my advice from other lenders. So,
Yeah. Oh my God. Everybody, I hope everybody took notes there. I know Mel went super fast. So definitely rewind these past like 2 minutes that she shared all those tips when it comes to underwriting, to all those ingredients, right? When it comes to lending. Because it's not just the underwriting, like she said, that's just one small piece of this whole recipe, right? To make it a successful loan. The risk is also super important, right? Because in there's a in our community there is these, oh my God, you're gonna get like 20-30% flat returns. What does that risk look like,
yeah,
right?
yeah. And people like to count their chickens before their eggs hatch. And it's like, yeah, I don't know about that. That doesn't sound like it's ever going to happen. That sounds like you're going to lose your money. or,
Yeah.
or that sounds like you're going to take a piece of crap property if you've even structured it safely in the first place. But people will also get into these joint ventures, and they think that they're circumventing risk, and they think they're circumventing the law. And it's like,
Mm,
ooh, good luck with that, because now that you're a partner on it, you have no recourse on getting your money back, because that was an investment and that was part of the risk. Like, unless you're actually bringing an attorney in to structure these partnerships safely, like, you just gave your money to the partnership, and that's not, you're in an even worse position than if you were just a lender.
right. Yep. Yeah, that's an excellent point, right? Those JV agreements, because to your point, if they're not done through an attorney, or you're not properly part of the LLC, right? You need to make sure you protect yourself, because just you guys putting together a JV agreement doesn't mean squat at the end.
No, you've got to look at the roles and responsibilities. You have to look at the performance agreements. You have to look at the mechanisms for being able to do a buy sell or kick someone out. And there's maybe 6 different agreements that go with your JV agreement, your operating agreement, your buy sell, so that's something else that I ended up creating an AI guide for people to walk themselves through that process, and then take that paperwork to an attorney to kind of get it redlined and in accordance with the state that they're actually forming their partnership in. And that partnership doesn't have to be a formal LLC formation, but
Mm,
you want to make sure that JV agreement has some teeth. You want to make sure that there's some recourse here, because you're losing all your recourse by putting yourself in the position of capital partner instead of lender. So,
that's a good point there. Yeah, because there is that difference, right? You just mentioned two different words, a lender and capital partner. right? Capital partner is more like we were just talking about, some way JV agreement, but now you're actually a partner in the deal. So,
Right.
what Mel was saying, hey, what are your responsibilities, right? What if all these what ifs, right? You get divorced or something happens. What does that happen to that agreement?
Right.
So,
Failure to perform. You're siphoning all that cash into your pocket instead of actually doing the construction.
mm, yeah. Excellent tips, and I'm so excited, right? Because not only you started Capital Verified, but you also did a safety course, right, for the community. And it's so if anybody's checking this and it's part of Sub to or Gator, definitely check out Mel's Palmer's safety course. It's like I'm trying to remember, is it like an 8 week course? I know it was
Oh,
like amazing. 12 week course.
12 weeks. Yeah.
Sheesh, so much value every week being dropped by Mel. Um, yeah, so if y'all part of it, go in the I think it's in Kajabi, in the semester courses, definitely check it out. But the other part I wanted to share, Mel, is that you're creating a different program as well, right? I know you have Capital Verified where you can vet borrowers and stuff like that. But will you be? I'm just trying to remember that post on that on Facebook where you're going to be able to have that gateway between vetted borrowers and vetted private money lenders and come in and that gateway, right, to be able to have secure funding.
Yeah, so I offer it's called an investor's passport, and it's a third-party verification of someone's resume essentially. So it's background, education, experience, assets, income, and credit. And so investors will get the passport so that it can be kind of an accreditation package of sorts, right? It's not saying you're an accredited investor. That's a completely different process. But
Hmm.
a lot of people are trying to get into partnerships. They're trying to lend. They're trying to borrow, and people just don't really give them the time of day, and they don't know what to believe and how to verify things. And so this is a done for you verification of people. And so that is my investor passport service. And that's located on my site. I've been offering that almost 2 years now. And so I've got some vetted investors already that have their passports. And what I'm looking to do is help people a little more. So that is a tool for them to use. I do not market them. I'll push out some of their wins every once in a while just because I love a good client win.
Yeah.
But people have been asking me specifically, "Oh, I wanna lend to a all of your borrowers with a passport." And for me, I've never wanted to broker that liability, because there's still a deal that goes with the person, right? You
Right.
still need to vet the deal. And so, I was separately offering these services of kind of deal vetting and the investor passport. And so now I'm like, okay, I can broker these. I bring in a third party broker depending on the state that is being involved. And then I'm offering the connecting service of vetting the deal and the person. And that way it's verified and it's a third party. It's not somebody who's directly, interested in.
Yeah.
I always feel like when you're a part of the deal, there's a little bias that goes into that, right? Versus the third
Right.
party and so, I just want to offer that true third party brokering to make sure that people are doing things safely. And so, yeah, but my investor passport is the primary service, right? And if people want the full womb to tomb for the loan, then let's go.
Yeah, I put it here. It's in the little banner down there, capitalverified.com. Mel also has it there. Definitely check it out. If you want to be a better borrower where you could potentially raise capital quicker, because you have all your due diligence in check, right? You could prove your, like what Mel was saying, your track history, your all the other things you need to make sure that borrowers, or lenders, right, are more in line with you. Yeah, definitely check out Capital Verified. I'm so excited again to have you here, have this conversation. Mel, I know we talked about all these guidelines, right? Like these checks and balances and the recipe, right, of things that are going on. currently I've been seeing a lot of people raising capital now through fractional app, right? What's your take on fractional app and securities involved in that?
Yeah, I mean, I think fractional lending's a great way to get in, right? So you're coming in with other lenders. I do think it's all deal dependent. And so I don't have a take on the whole thing. Well, like the whole concept itself is great, but individually, I think people just need to understand what they're getting into because
Yeah.
um, if you've got 40 lenders on a deal and 40 opinions, woof. Um right? So if everybody's got a vote, I do not envy them.
Yeah.
They're
Yeah.
taking on, uh, organizing some madness, I imagine. And so, but it's got to be a great way to learn and get your feet wet, especially if you're trying to lend smaller amounts of money.
Smaller amounts, yeah.
Yeah,
And I think that's the key right there, right? Fractional gives those investors that have smaller amounts where they can go in $5,000, right? And it goes back to that risk tolerance. Is
yeah.
$5,000 something that's really gonna, impact you, or is it something that, hey, I want to get my feet wet, I want to learn more about it, you know, instead of potentially losing 40 or 20, right? It's sometimes it's smaller bite to eat, and you're okay if something goes south with $5,000 for most people, right? Not saying that $5,000 is still big money, right, for some individuals.
And just also having that transparency and that umbrella of supervision, I think is good for people. I do like to me, I'm like if had a deal, I would much rather deal with one or two people than up to 50, which is what they
Yeah,
allow for their deals. And so I don't know how that is controlled or not in the control of the borrower or whoever's putting together the deal, because at that point they're not really a borrower, they're a true partner um with the fractional lenders is my understanding. So yeah, that's like getting into a what it really really big marriage. You were taking on your
right.
50 wives up to 50 wives. um little polygamy
It,
going on there.
right. We'll pivot from polygamy. I can't even pronounce that word, but into something more that, one thing I wanted to ask on our talk was, I know we talk about wins, right? And horror stories that happen, but the emotional roller coaster, right? And how to overcome when you lose money, right? Because a lot of us, right, have potentially saved a lot of money, right? Or saved a small chunk of money, or potentially got some tax returns, and you're like, oh my God, this is what I'm going to use to invest, right? And then something goes south, right? The recovery emotional pieces of that, right? Some people really struggle with that. How do you have any suggestions, for investors that are struggling, or maybe a fix and flip went wrong, to your point, right? They can recover some money, but when a PML goes south and the borrower is not really, doesn't have integrity in place and doesn't pay you back, right? That hurts. How do you recover from something like that? Do you have tips around that?
Yeah. I mean, at the end of the day, it's a little bit of acquiescence. It's a little bit of, all right, what are you going to do with this, right? How
Yeah.
are you going to respond versus react? And Viktor Frankl, and I'll have this quote off slightly, but he's got this beautiful quote, and he was a psychologist that was in internment in Auschwitz and several other camps during the Holocaust. And so he lost everything. He lost his entire family. He lost his entire body of research prior to um, going in the camps. They just burned it right in front of him. And he has this phrase or quote that's basically saying between stimulus and response is space, and in that space is your choice, right?
Mm,
And you've got a choice on how you're going to respond. You have a choice on what to do. And for me, I mean, plenty of people lose money in real estate. there's a reason why people say real estate is risky, right? It is. You can lose a lot of money.
Yeah.
To me, it's also risky to do nothing. It's also risky to rely on this economy that is, completely out of our control. On the job market that continues to reduce benefits while also increasing workload, right? While they're also increasing their profit margins. And so to me, I think being an entrepreneur is a great way to take a little bit of control and a little bit of agency of your own life. But with that comes risks and responsibilities because now you don't get to blame your boss. It's on you.
It's on
so
you. Yeah.
so I do think there's a lot of individual accountability and agency in this instead of blaming other people, right?
Mm.
Um, and you may have seen this, but I like to talk about responsibility versus blame, right? And fault. And so it might not be your fault that somebody doesn't meet their end of the agreement, that somebody lies or misrepresents or commits fraud. Might not be your fault, but it's your
Mm.
responsibility to protect yourself. And it's your responsibility to kind of get back up and get in the game. And if getting in the game means getting on a different field and not playing soccer anymore, but maybe switching to football or whatever, like maybe you're a
Yeah.
track and field star now instead of some contact sports. And so I think the point is you get back up and you get back in the game, but you learn your lessons because I've seen people go back in and just continue gambling. And it's like
Mm.
you didn't pause and you didn't figure out what went wrong in the first place. And so now you're triple down on your losses and you get back up and blame everyone else. At some point there's some personal accountability here and responsibility to take care of
Yeah.
yourself. And so not to be harsh about, how do you recover? I think the way you recover is by taking some agency of the situation, accepting what you can't change, right? There's a lot of acceptance that comes with it. And then figuring out how are you going to respond? How are you going to
Yeah.
move forward? What are you going to do? And for me, like so many people will quit, and I don't think there's a problem with quitting if it's truly not what you want to do or who you want to be and how you want to live your life. Like there's so many different ways that you can be an entrepreneur. It does not have to be with real estate, right? Um, but I think if you want to get back in the game, you figure out how to help yourself and help others and figure out how to actually be of service because I feel like a lot of times when people are losing money, it's because they're chasing returns and not
Mm.
chasing purpose, not chasing meaning, not investing in accordance with their values, whether it's the people that they're investing with that are just horrible people that are offering wonderful returns, or it's the type of investments that they're going
Right.
after. Like, you can't tell me an EMD like loan at 30% returns or whatever is serving anyone but your pocketbook. You just can't tell me that. Like, and so unless you're structuring some sort of very meaningful way that you're deploying your funds and who you're deploying them with, I do feel like the more you play that meaningless money game, the
Mm.
more you'll lose because you're playing these gambling games instead of actually investing with purpose. And so, I don't know, that's just my take is be purposeful, be intentional and invest in accordance with your values.
Oh, that is so good. I'm gonna write that down. I'm gonna create investing with purpose, right? Because it's so true. Instead of gambling, instead of thinking, well, I'm gonna just amazing 20 flat return rate on this and this. Well, what does that mean, right? Like, does that really something that is it worth, right? You're even if you lose that money, right? Is it following your purpose? And I think Pace, my mentor Pace Morby, right? He talks a lot of last year. He spoke a lot about Mount Everest, right? And having that purpose, that vision of what is your like goal in real estate investing? What does that mean, right? Like, what is your purpose in this investing space? And gaining that clarity, God, is so important, right? Because now you can focus your energy, your investing. in that clarity, in that purpose. Um, so excellent. Thank you for sharing that, and hopefully, if y'all are checking this, thank you for taking time. And I know we're at 35 minutes into it already. It's time's flown, but if y'all want to take something, investing with purpose is a must, right? Especially to Mel's point, right? It doesn't have to be real estate. If you're going to go into e-commerce, or if you're going to explore other avenues, other entrepreneurs, right? Is it really purposeful? Does it really drive you? And that is so true, especially on this entrepreneur, right? Because things are going to happen. Things are not going to go right. And how you get back up is once you find that purpose, because you're not going to give up. So
Yep.
that's so good. Thank you.
Thank you.
Yeah, but definitely want to respect your time. 35 minutes into it, I've had an amazing conversation with you, and hopefully the audience, finds lots of value. Again, everybody wants to check out her services. It's capitalverify.com. She also has amazing content on Instagram about borrowers and lenders, especially around Halloween time. I love those.
Spooky season. Yeah. I like spooky season. It's fun.
Yeah, those are always fun. But Mel, anything else you want to share before we call it a day here or call it a time for our podcast?
Yeah, sure. So, I mean, I do have an upcoming workshop in person in Monterey.
Let's
So the
go.
20th to the 21st, if you are not on my mailing list, you can go to capitalverify.com. I will be hosting quarterly workshops. I've been doing post-traumatic growth training for first responders for the last 2 years. And, we talked about it a little bit, but I'm starting to offer post-traumatic growth workshops for investors. And so, um, first responders don't have a monopoly on suffering, right? And the frameworks apply to everyone. And so I'm really excited to be hosting these and then doing it in Monterey. It's a beautiful location and it's my home. And while I don't mind going to other places, I do love where I'm at. So I'd rather
Yeah.
be hosting things here. Yeah, so that's coming up June 20th and 21st. And I'll be hosting them quarterly. And so if you get on my mailing list at capitalverify.com, once you get emails, I'll ask you right away in the beginning what you're interested in. And you can just click the workshops button and I'll make sure that you get all notifications for upcoming workshops.
Awesome. Well, that's going to be exciting. June 21st workshop. Can you give us a little bit of what this type of workshop is going to be involved? Just a little teaser, just to give them.
Yeah. So this first one is going to be very practical, more specific to lending, but the other ones will be more they'll also be very practical, but they'll be more open to other entrepreneurs because it'll be based on the post traumatic growth framework versus the private lending, discipline. And so this first one will definitely do some mission, vision, values, and some of your intentional investing to be that framework and that foundation for launching your purposeful business, if you will. And then we'll be workshopping and doing some exercises that will help you kind of nail your pitch, your market, who you're helping. Because at the end of the day, being a lender is a service. And so many people want to be like kiss the ring, I'm the lender, but at the end of the day, if you're not providing a service, people aren't going to become repeat clients. And due diligence becomes a lot easier when you're working with the same people and you know their flavor of investing and their communication styles and their performance, because you can verify past performance, but when you get to see it firsthand, it's a little more it imprints on you a little more, right? And so
Hmm.
just kind of going through all of the practical parts of really nailing your private lending service and doing it in a purposeful way. So that's what the first one will be. And then, it'll continue to build on one another.
To
So
evolve,
for
yeah.
these quarterly events, slightly different topics each time.
Well, that's exciting. So everybody go to capitalverify.com. Make sure you click on that workshop icon, June 21st. That's going to be exciting. Mel, thank you again. I hate I missed you at Squat Up.
I know.
to meet you. But I got to see you. I guess we'll connect at another time in person.
Yeah,
Super grateful for your time again, and definitely follow Mel at her Instagram. Wait till Halloween. Well, you don't have to wait; just do it now. I was gonna say, wait till
well,
you see all the Halloween stuff. You could check it out. Just scroll down. I love it.
that's right.
Mel, thank
Thanks,
you
Edgar.
again.